Okay, running. Yeah, I saw that question. Thank you, Paul. That was cool. So the question was, can you yield or get liquidity pool running with clap? So there was one clarifying question I had was, do you mean by just putting clap in, or are you willing to put in a token pair, so clap and ADA, because that's ultimately what's needed.
Yeah, I just used that as an example.
Okay.
Didn't know if there was anything you could do with just, for argument's sake, a token, say clap, or I don't know what else, Luna, or any other of the Hosky or whatever, of just one side of it.
So there, technically there isn't, if you're talking about the fundamentals. So when you're getting involved in a decentralized exchange, the way that the service that they're offering is that people are going to be able to swap one token for another, and that's what they charge their trading fees for. That's how they make their money, and that's how they're able to reward people who provide liquidity. So when you're looking to when you have one half of that token pair, what you can do is put it into the liquidity pool by selling half of it for the opposing half of that liquidity pool's tokens, and then you're putting in half of the token that you originally had. So if you've got 100 clap, then you will sell half those 100, so you'll end up with 50 clap, and you'll use that 50 clap to buy as much ADA as you can, which I don't know what the exchange rate at the moment is, but say it's 10 ADA or 200 ADA, then you'll end up with a token pair of 200 ADA and 50 clap that you can put into the liquidity pool, and off the back of that you'll earn more clap back. Typically, the different exchanges offer different rewards for the token pairs you're putting in, and they also can do that process for you. So you get what's it called? Oh dear, my mind's gone blank now. Let me jump to screen sharing as well. That'll help me. So you've got the two main dexes that I like to use on Cardano are Minswap and also Muesliswap. So you've got what's called a zap-in on Minswap, which makes it much easier for you. So you could come to Minswap, connect your wallet, which actually this might be the correct one. Let me just check. So this is the correct wallet that I've got attached. So I can then click Zap, and it'll say these are the token pairs that you're looking to provide liquidity with for. So I want to pair ADA with clap, say, and they have a pool. So here I'm looking to exchange actually what I can do is select the clap token from my wallet, which I have none, which is a shame. So let's pick another token. What have I got? Okay, that's the NMaker. If I was going to provide liquidity in the ADA NMaker pool, then it will sell half my NMaker and spend half of it on ADA, and then put them both into the pool, and it'll do that automatically. So you're just selecting your original token that you want to zap from, choosing your liquidity pair that you're zapping into, and then it will do the rest for you. The rewards for that pool. So let's have a look at the pools now. So with NMaker, you get different rewards. So this is a ADA and Maker pool. There's a few on here actually. So you can run different pairs. Copy and NMaker could be a good pairing, or Min and NMaker. There's actually 2 ADA NMaker pools. So you typically look for the one that had the most volume in it and the most value locked. So this has got 122 ADA, and this one's got 1.79 million. So that's 1.79 million's worth of ADA and NMaker in that pool. So that's the one you'd probably want to go for. The more volume locked you've got in it, the less sort of risk of impermanent loss. Is a sort of a general rule. You can open up and have a look at what sort of returns you'll be getting. So these are the token ratios. So if you've got 1 ADA in there, then you'll have to pair it with 101 NMaker. You'll earn about 4.08% in trading fees over the year. So that's actually less than just staking ADA on a native stake pool. However, you can boost that with various additional features. So like on Muesliswap, you know about the hungry cows. You can apply a hungry cow to your stake, and it will boost that depending on what the boost ratio is of that NFT, that hungry cow NFT. So here you're getting trading fees, and then you'll also earn yield when it's in a yield farm. So and what happens is you're putting in ADA and NMaker, and then you are sent to your wallet is these LP tokens. So that's the total number of LPs available in the pool at the moment. And these LP tokens are unique to the platform that you're using. So in this case, there'll be Min LP tokens, and you can actually take those LP tokens and then farm them to earn additional rewards on top of that 4%. So they've got all these different farms in here. Whether they've got one for NMaker, yes. So now you can see, okay, this looks more like it. We've got 4% in trading fees by providing ADA and NMaker, but I can also get 60.75% APR in paid out in NMaker and ADA and Min tokens. You can see the ratios by hovering over the eye. So I'll get 0.67 APR in Min, 0.12 in ADA, and 55.88 in NMaker. So if you're interested in growing your NMaker holdings, then this would be a good pool to get into, because you can get 55% in NMaker from the farming aspect of it, plus your little bits of Min and ADA, which are nice to have. Also the 4% trading fees that you'll be gleaning just from providing liquidity. So all in all, it starts to add up. 64% is not a bad return, considering our alternatives, which is banking. So yeah, pretty good. So if you've got some clap, there is a pool there. Let's have a look at that one. So you can get, so it's got only 360,000 ADA, which is all right actually for a small token like clap. 1.23% in APR just from the trading fees, so that's not too great. You'd be interesting then to see if they actually have a farm to go with that, and they do, and you can get an additional 6.84%. So and that's paid out in 4.73% of Min, 0.88% of ADA, but you don't get any clap rewards from that. So if you're happy to stake your clap and earn your rewards in a little bit more ADA and a bit more of Min tokens, then that could be a good thing to do. Yeah. But again, the ratios vary greatly between token pairings and all sorts. So you do have to do a bit of research figuring out whether it's worth it, going to the effort of putting it into the liquidity pool, watching it, harvesting every now and then, whether you want to compound and all that sort of stuff. is you build up a strategy of what you want to get involved in and how much time you want to put into it. Yeah, how's that? No worries. Oh, hi, Robbie. Stuck in there. Didn't see you. So, any other questions about liquidity pools, yield farming? And the other platform that I use for it is Muesliswap, and actually I've just moved quite a bit over from Minswap to Muesliswap because they offer this Hungry Cow NFT. In fact, yeah, one thing I did want to share with you is that because I'm got a little bit of passion on it at the moment for finding out the best Hungry Cows, I went and did a bit of research and mapped out all the sort of tokens within the price range I was interested in, looking at their boosted yield factor, and have created a chart that maps out a good curve, a really nice curve actually, of where the best price to get in terms of boost and how much you're paying in terms of your initial NFT purchase, and how quickly you'll claw back your expense on the NFT based on how much capital you put into a yield. So I got a bit geeky, but I'll share that with you. I'll just get it up now because I think you'll find it interesting. If I can remember where on Drive it was. If anybody else has any other questions as well, then feel free to pitch in with them now.
How often do you farm it? Would it be sensible to maybe do it once a month?
Certainly, yeah, at least once a month, going in harvest. What I tend to do, so when I'm starting out in a pairing, I will check it daily, and in fact, for the checking side of things, I think Minswap has got slightly more better data transparency. So when you're getting into a farm, let's see what pairings I've got. Connect my other wallet. 1 second. I think it's in this one. No, it should be this one. Minswap. Why did that not work? Minswap. See the refresh. There we go. Yeah. So yeah, I've created a token pairing from society tokens that I hold, and some ADA tokens. ADA Society society tokens are are tied to the Ape Society NFT project, which is a purely speculative club for people who hope that NFTs will massively rise in value. And so far, it's working for society. So I'm not going to sniff at it. And so I bought some of their token rather than their NFTs, just so that I could benefit from the rise of their whole market. And what I do like about Minswap is that it exposes exactly what portions of ADA versus society I've got in that pool. So I put in an initial amount, and it would have been the same value of ADA to the same value of society put into that pair initially. So say it was 50% in ADA, 50% in society, as I put that into the pairing. And so that probably resulted in something like 200 ADA and 1300 society. And then based on how the trades are going, on how many people are looking to buy ADA, how many are looking to swap ADA for society, how many are looking to swap society for ADA, and how well the price of the ADA token is doing compared to how well the price of the society token is doing, then your ratios of ADA to society change in the pool. So a little bit of what Luca was touching on this morning, the gaming platform I can't even remember what it was called because I'm not in that ecosystem, um, that had a vulnerability, and so one side of the pool was able to be drained. The value basically dropped out of the gaming token that was in that pair. So if you had a gaming token of Ethereum and whatever it's called, GLab or something, then if this token becomes worthless, then all the ADA, or sorry, the Ethereum in the pool will be sold to buy more of this token to try and keep the ratios at 50-50. Obviously, once all the Ethereum is sold out of it, and this token is still falling in price, then your liquidity pool's value, the liquidity you're providing to that pool just diminishes to zero, because all the Ethereum's been sold and all the original gaming token has dropped in value to the extent that it can't possibly hold at an equilibrium. And if the gaming token ends up at zero value, then your holdings of Ethereum drop to zero as well. And the same could happen in this token pairing. So that's always a risk with any sort of investment. There's a risk, and this is what it is with liquidity pools, is that one token will be sold to top up the other one depending on the price volatility. So if ADA is, that's probably going to be the stable half of this pairing. Society will be the volatile one, and so you'll be buying and selling ADA to try and match the pricing, and buying and selling Society to try and match the pricing. If something happens in the Society project, everybody decides the NFT project is useless and they're going to run away with the money, then the value of that token would drop right down, and the ADA pair that you've put in would also all be spent to buy more ADA, so more Society tokens. You'll end up with a whole load of Society, worthless Society, and I'm not saying that that's the case. This is a hypothetical, and just having sold all your ADA. So effectively, the money you've put in has gone to effectively zero, or it's all been converted into Society, which value has dropped massively. So that's the risk. And so these are the figures that you're keeping an eye on, which I really like about Minswap, is you can actually come in. You're actually holding the LP tokens, so you've been given this LP tokens because I've put in ADA and Society to begin with, and I'm given LP tokens, so I'm actually holding the LP. But the pool, the smart contract, is managing the ratio of the original ADA and Society in that pairing. And so when I go to exchange my LP tokens back for my ADA and my Society, when I want to harvest or collect my rewards, then it'll give me the ratios. See here, so at any point in time I can say, okay, I'm going to get out 207 ADA and 1,233 Society at the moment. And so what I do is I put both those figures into a spreadsheet when I'm initially starting with the pool, and then daily I'll go in and check on how much ADA has been sold and how much Society bought, or vice versa, and I'll monitor that. And if the I also have the pound or dollar value of the ADA and the dollar value of the Society next to each other, next in my spreadsheet. And if the total of the dollar price of those pairs combined stays about the same, then I don't mind if these figures change quite a lot. What I will be looking out for is if the dollar value drops, and I can go and check and see that actually ADA has stayed stable, but the dollar price of the token pairing has dropped. That means that Society must have dropped in value. And so I'll go and look at the price of Society and go and look at the price of ADA and compare it with the dollar value, and I'll know then whether this pool is dropping in terms of the value that I put in. Is the whole liquidity dropping? And if it drops too far, then I might cash out. But if it stays roughly in proportion and roughly with the same sort of dollar value, and of course obviously we're comparing this to the whole crypto market as a whole. So if Bitcoin rises and falls, then the price of ADA and Society will follow with it. So if actually I've got this dollar price dropping, and actually Bitcoin's price has dropped as well, and the whole crypto market's dropping, then that's okay. I'll keep my pairing because I've still got the same amounts in there, and I believe in the whole crypto market as a whole coming and rising again down the road. So I'll stay in. But actually, if it's one of their tokens has dropped right down, then it might be okay. This one's not working. Let's get out. And so that's the sort of the observations I make and keep an eye on daily to begin with. And then I'll decide, okay, how often do I want to harvest my tokens? So if I go over to the farm section, and I'll find the pools that I've got staked with. And so if I look at ADA Society, and I'm getting 52% APR on that, which I'm very, very happy with. And I'm getting it mostly in society tokens. So I'll be growing my society holdings by 31%, 32%. I'll be getting a bit of ADA and a little bit of Min as well, which is great. So I'm getting 3 tokens from being involved in this pool. And I can see that since I started this pool, I'll have earned 10 Min tokens, 0.07 ADA, and 63 society. And I'll have those figures in my spreadsheet as well, and I'll track those every few days and see how much is in that for harvesting. And depending on how much, so say I've put in £200 to begin with, then every time these rewards hit, I don't know, £10 or something like that, or £20, then I'll go in and harvest those. If I'd put in 10,000, I'd probably wait till it got to 100 or more pounds and then harvest that. And that will come round every sort of 3 days if it's a really high yield pool. I mean, if it's a crazy high one, some of them are, when they're brand new, they're getting 1,000% returns, and so it's worth going in harvesting every day and then adding that back in, compounding it back in again, because your holdings in the token pairings will rise then, and you'll be earning interest on the whole of it. So you've got compound interest opportunities in all this mix as well. But all of it is you're exchanging time, you're watching charts, you're having to really pay attention, and so you're and ultimately time is your most valuable asset, much more so than the crypto you're holding. So if you are spending more time looking and watching than you are earning, then it's not a good use of your time. So you have to try and think about that. Think about time is the rarest asset. I only have so much in life. If I'm spending my half my day staring at charts, it's not a good use of any human's time. There's more things we should be getting out of life. So yeah, play that off into the whole equations, and you'll come up with a balance that you like. And for me at the moment, it's sort of a new pool, check daily. Once I've got established, I'm happy with the way it's going, and these percentages aren't dropping, because these percentages change as well. They're not dropping at a massive rate, then I'll stay in. And I'll set up a rule, say, okay, when this drops to below 20%, then I'll definitely get out. I'll just harvest everything, close down that liquidity pool, and find another token pair to yield, because then it's not worth my time and attention of spending 20 minutes every 3 days looking at managing it, making sure everything's as I want it. So yeah, that's my strategy. Let's try and get these spreadsheets up for you. So yeah, any clarifying points in that you need?
I've got some like you've made mention of in Muesliswap. So I've got ADA and Milk and Clap and ADA, and I've just also gone on to Hosky and ADA as well.
Right, yeah. And in fact, I think on Muesliswap they have what was it, Minswap? It's just filter. So yeah, they've got a 32% yield on Hosky ADA pairing. You're getting 20% more Hosky for your money. But remember, Hosky is a meme coin, and ultimately worth nothing, and that's their intention to always be worth nothing. In reality is probably it's going to accrue in value because that's the way of meme coins. But he's printing it left, right, and center. He's giving it out left, right, and center. He's all about having a fun token that people can shout and laugh about than he is about making money. Certainly at surface level, that's what he purports. I think underlying the value of Hosky is going to rise as well, but it's just too much of a gamble for me. I'm not that interested. I have some. I'm a Hosky millionaire, I think, by the fact of they just give it out so voluminously that you end up as one anyway. But actually, maybe I'm not a millionaire. I don't know in Hosky. I don't even pay attention.
I've got about 43 million.
Nice.
Put in, I think, at $6. 6 ADA, sorry.
6 ADA. That's a significant Hosky holdings. That might be worth a lot someday if Elon gets a hold of it, like he did with Shiba Inu. You never know. So there's a pairing on there. There was also, I think, a decent one on to earn on here. Yeah, they got one on Muesliswap that's at 93%. And if you pair that with your Hungry Cow NFT, then that's an even larger one. So you can go and select your Hosky. I thought I had some Hosky in this wallet. Maybe it's not. Don't know. And then you can select your Hungry Cow NFT, and you'll be getting the 93% listed here, plus whatever the boosted yield is on your NFT. So that could well be worth doing. And the benefit of having a Hosky ADA pairing is that you're never going to have to put in too much ADA to be earning a whole lot more Hosky, because I'm sure you can find 6 ADA, scrape together 6 ADA to put into your pool along with your Hosky holdings, and then you don't need to zap in or anything like that. You can just put in. I'm willing to spend 6 ADA and getting more Hosky back, and a decent rate. So, I don't appear to have any Hosky. Or somebody's lying to me. I don't think I sold it all. I don't remember putting it into a different wallet. I'm sure it was in here. There we go. I've got 12 million. So, not quite sure why that's not showing up in maybe just needs a refresh. Unless I've ended up with a spoof coin. Yep, no, it's found it in there. So it should. Sorry, that's probably a bit small for you. So you can see it's found my holdings there, which is coming in at 31p. So there we go. But of course, you've got a lovely chart going on with Hosky at the moment. They've massively jumped up in value. But
all-time high.
Yeah. But a 1,000% increase on a token that's worth 0 is still 0. So he's just gone off the bottom of the charts, which is great. Sorry, I was looking for the earn. So in my Hosky, I need yield and Hosky. So it's not an. Oh, sorry, no, it is an ADA Hosky pool, and you'll be earning it in MYIELD tokens, which is Muesliswap's rewards, default rewards, a bit like Min tokens on Minswap, plus Hosky. So I should be able to select my. Oh, I haven't. Of course, so Muesliswap does it a bit different. They don't have zap-ins or anything like that. So when you're applying stake in Muesliswap, you'd first have to go to liquidity, and you'll be adding liquidity. And so here you'd select ADA and your Hosky pairings. I can select maximum Hosky. That means I'm going to have to put in 0.84 ADA. You know what? I'm going to do it. Sounds like fun. So you can have a live demo of me risking my Hosky holdings. So it pops up the signing window from Eternal Wallet, because that's the wallet I've got attached. When you're, whenever you're getting involved here, think about the fees. So particularly with this, which effectively is an 84%, or a 31p, a 60p investment opportunity. To get access to that, I'll be spending 5 ADA, which is obviously is not a very sensible deal. Unless you're very confident in the future price of Hosky. So maybe I won't do it. But yeah, so the numbers in red are the ones I always look out for, because that's the ADA that's leaving your wallet when you sign this transaction. So what's happening is that 5 ADA is being given to Muesliswap platform. Some of that will go towards running Muesliswap. Some of it will be transaction costs, because we're dealing with smart contracts. And then there's the base transaction fee as well, which is 0.25. And you can see the Plutus is the language that the smart contracts are written in on Cardano blockchain. And then it's got the addresses of where the actual contract lies on the blockchain. And then you've got your UTXO inputs and outputs, a bit of detail on there. So these aren't going to be spent or anything. They'll come back to you as change in the exchange, in the transaction. But yeah, so 4.8 ADA and 12,593 Hosky are going to be going into Muesliswap. The 12 million Hosky will go as a pairing. 0.84 of that will go to the other pairing, the other half of the pairing, and then 4 ADA is being given to Muesliswap. That's their fee for getting involved in a liquidity pool. So it does cost you to get into these things. I mean, 4 ADA is a tiny amount of money, but yeah, bear these costs in mind. You also pay fees every time you harvest and then put the money back in, which is why it often doesn't make financial sense to compound very frequently, because daily you'd be spending, in this instance, 5 to put it in, about 2 to get it out. So 7 ADA each time you're doing it. If you're spending 7 ADA daily, that's significantly eating through your ADA holdings. And so, weigh up the value of how often harvesting makes sense for you. Which is why I'll delay it until I've got a decent chunk of capital to pull out and put back in again. So then you would just put in your spending passphrase, sign it, and that will send your tokens into the smart contract, and the exchange will query the blockchain, find out that that's happened, and then send you the LP tokens back into your wallet. So you would receive those back into your wallet here. So you go into the token list and find your LP tokens. And then once you've got your LP tokens in your wallet, you can go back to the exchange, go to earn, onto the farms tab, and find your pairing. So I think I had some. No, I don't think I've got any LP tokens that aren't farmed already. But yeah, you would see. So if you just got into that Hosky pairing, then you'd see the balance of the LP tokens here that you got available to stake. Click max. That'll fill that in with a billion LP tokens. You can select your hungry cow. That'll pop up a little window. And you have to have the hungry cow in the same wallet as you do your token pairs, your LP tokens. Select your hungry cow, and then click stake, and it will get you to sign another transaction fee, moving those into another smart contract, and then you'll be good to go. And you'll see under My Earnings, under Farms, you'll see the liquidity pools that you're involved in, and then under just under Farms you'll see that. Now, with Muesliswap, of course, they like to keep things mix things up, and so with Muesliswap even, and in fact in this one I will swap to my other wallet. And I'm going to switch that connector on for the other wallet, Muesliswap. Just going to reload. Struggles to switch wallets sometimes. Sometimes it does it, sometimes it doesn't. And you can see the pools that I have here. And so once you have got some LP tokens staked, you've got a liquidity pool going, you've got some LP tokens staked, you can go and unstake them, and that'll prompt a transaction signing, which I'm not going to do at the moment. When you do that, you'll get MYIELD tokens sent to your wallet. For this one, I get MYIELD and NMaker. This one, I get MYIELD and EMP tokens. And the MYIELD tokens, you have the option of then either selling them. So you could sell your MYIELD for ADA, if that's your base token, which most likely is if you're operating on Cardano. So you could sell your MYIELD. Well, actually, I've got 134, and I'll get 2.5 ADA out of that. So that's a quick way of getting the money back out again. Or you could actually now have the opportunity to take those MYIELD tokens, go to Earn, and MYIELD, and you can then add in your MYIELD tokens and stake those as well. And when you stake your MYIELD tokens, you will get back your M vouchers. And I did talk about this last week, didn't I? So the M vouchers are like an option. They let you buy min tokens in the future for the price of 1 ADA. Now currently, so once I've staked, so say I did do this and I had these in the stake pool for 30 days, then I'll get back 1.34 M vouchers, and that will let me go in and buy 1.34 milk tokens at any point in the future. Sorry, not 1.34 milk tokens. It will be effectively 1.34 ADA's worth of milk tokens, as if you're buying those milk tokens at 1 ADA. It's very complicated. So your the price of milk is locked for you then, always at 1 ADA. So at the moment, milk is actually trading higher than ADA considerably. So if I've got one if I've got, say I've got 3 milk tokens, then I'm going to get 7 ADA out of it. So if you think of the M vouchers, I could then go and exchange 7.97 ADA or M vouchers for 3 milk tokens. So I've got out from that 1.28. Have I done that right? I've kind of lost myself in the specifics, but
you'll get, if it's 1 for 1, you'll get 7 7.97 token.
Yeah.
It's 1 for 1, isn't it?
Yeah, that's right. So so that's a a much better return than just going straight through your MYIELD at the moment, and swapping those. So it's an additional lock-in period. So you got 30 days then, but you're guaranteed at the end of it at the moment to get 2.8 times what you put in. So it's I'm partaking in that to a certain volume of my take. Instead of taking them out straight away and selling them, I'm going to keep probably half in, staking those MYIELD, getting M vouchers, and then long term holding those just to, because I expect the price of the milk token, the value of the milk token to go up. And if I can always get them at 1 ADA, that's great in my book. So yeah. Now let's get these spreadsheets up that I wanted to show you. Can I? They're going to load in here for me. Should not. Good. So yeah, what I did is I set a price bracket of buying my Hungry Cows NFT of between something like 60 and 2,000 ADA, and I went through and found all the tokens that looked like a really good value. Sort of the cheapest, a decent rate of boost, so anything above 40% return boost. And the cheapest one I could find above that, and that was 66 ADA. So that was sort of my floor price of getting in. I could spend 66 ADA, get a boost, a guaranteed fixed rate boost on the yield farms on Muesliswap, any of the yield farms on Muesliswap for 40% boost for 66 ADA. And that to me sounds like a very good deal. So that's 40% forever. Anytime there's a liquidity pool on there. So here I've got the return in percentage per month. So if I got I also complicated it further. So if you're willing to put in say 2,000 pounds worth, and obviously you can change these ratios to dollars or whatever. Put in £2,000 into the pool. So you found a pool that you like. So in this case, I think it was looking at NMaker and ADA. So if I was putting £2,000 in, I know that the interest rate being offered on Muesliswap at the moment, or at the time, was 54%. So earning from farming NMaker is 54.08. So I could take that figure and drop that into my spreadsheet. It's got a conversion rate of 82 pounds, and that's actually pulling from Google Finance, so it's updated automatically, which is very handy. I've got the percentage boost offered by that Hungry Cow NFT. The purchase price in pounds, so that's £24 I'll be spending on an NFT. I'll be getting a return of 8%, 7.97% per month, by pairing this 54% plus that 41%. So that's 8% return. So in terms of pounds, on a £2,000 in, I'll be getting £159 return per month. And so I've clawed back the purchase price for that Hungry Cow in just 4.6 days. So, you know, these figures, these input entry figures determine, you know, what's a good, how much is worth spending on a Hungry Cow NFT in my mind. So if you're going to be putting in as much as £2,000, then, you know, getting your money back out on the NFT itself, if you get that back in a week, I think that's really good. And so for that, you'd be getting 52% boost, and earning 8.88%. It's like £177 a month income from a £2,000 investment is not a bad return. However, if you're going to be putting in, of course, you know, the further down this, I've just lost my second screen again. It's gone black on me, so bear with while I do my regular weekly unplug of my second monitor and replug until it loads back up again. I'm gonna like have a intermission that I could just play in the video at this point, where it's like, remember the kids, click like and subscribe and notification bell to get all the latest news, and stake to fluid pool. I'm gonna have to record
We
those.
can go off ice cream.
Yeah, everyone gets ice cream or a cup of tea, and I get to do an advert or an albatross. You can always ask for an albatross at the intermission as well. So then 10 days, as I go further down, you know, spending more and more on these NFTs. Let me just lock that there. So freeze on 6. Oh, too many. View freeze at row 5. Need to click this row. 3, 5. So I'm spending, you know, £100. What do I get for that? 9.95% return. 190, nearly £200 a month for a £2,000 investment. That look good. It's going to take me 16 days to get the NFT back, so that's when I consider I'd start earning. So from 16 days onwards. And so obviously, if I've got a highly volatile, this variable rate is dropping rapidly, then this doesn't get such, you know, after you're sort of looking at 30 days before you're getting your NFT money back, you might you know, be of the opinion that's actually just too long. It's too much to spend. £220 on an NFT. Don't know. I'm not gonna earn the money back for it until a month's up, and by then the token price might have dropped, so Muesliswap might have had an issue, and so you might decide not to get in. However, if you're feeling bold, you've got more money to go in. Let's make it 5 times that, 10,000, and actually, then with a higher rate of yield and return, you can get your money back in 6 days if you're spending 200. So it's like, okay, it's something reasonable again. And of course, it all changes as you go down the chart. But then what I did with I plotted all those out on a nice scatter graph, so you can see then that these are, and all the tokens I found are very similarly, you know, following a curve. And this was sort of my actual realistic purchase price, I thought, which was about, you know, 600. I can't see myself spending more than 600 ADA on an NFT. I thought, and so I didn't collect more values. And of course, all the time there are ones that are listed on there, so you can get some of these Hungry Cows NFTs listed at 2,000 or 1,500 ADA, and they're giving like a 60% yield boost, which puts them on this place on the chart. So they're really not good purchases. But all these ones, I think, they're the best ones I could find. They're extremely good deals. Any of these are worthwhile getting, in my opinion. So 260 ADA for a 64% yield is phenomenal. And even this one, spending 600 ADA, but you're getting 74%. And if you've got a long-term strategy of always using Muesliswap for getting yield on, or if you've got a whole load of capital that you're putting into it, particular token pair that you're very bullish on, even for a short period of time, then actually getting, locking in your fixed rate of return at 74% is really worthwhile. And so, this is the sort of thing I'm thinking, if we as a group, as a collective, we decided we were massively bullish on Endmaker, we were going to gather all our funds together in a 6-month splurge on Endmaker, and say we could raise 20,000, and actually it's worth us buying any of these NFTs, because we'll be getting the price NFT back in only 11 days, and our rate of return per month would be 11.84%. So, if together we're getting 20,000 pounds of ADA in, and we can get each be earning 2,366, it's not each be earning, but as a pool earning that much back, then that could be a really good group sort of effort. But saying that, I thought it was a good deal all for myself, and I went and bought out, splurged a whole load on Hungry Cow NFTs that were outside of my price range. So there we go. I now own 3 with varying rates of return. And I think I think it was about about 74. I think that's the one I actually bought in the end. So I spent 600 ADA on 74.74% return.
So it's return here. I really like this concept of like at this like as a community, getting involved with these sort of things, and I think there's I think that's something I think I briefly mentioned to you last time as well.
Yeah, and this your questions that triggered my thinking, so thanks for that. Yeah, so we could aggregate, we could apply a Hungry Cow to because you've got one Hungry Cow, we're spending just on one NFT, but we're pooling all the funds and we're all getting the benefit of that one NFT, so we could split the cost and earn the highest possible. So that's like, they do go up to crazy prices now. So an 80, that one is a bit of an outlier, but it's 88% locked in rate of return on any of the yield farms forevermore. So actually holding one of those, and even this one I'm very happy with, 74.4 is great. And so if anybody else is open to that idea and doesn't want to or wants to sort of spread the worry and the and the fear of getting in, we can either all fail together or all do well together, then that's something I'd be happy to consider. Utan's spawned the idea, so thanks for that, Utan. And anybody else wants to get involved, feel free. Let it be known, and we can look at it.
I'll talk to the boss lady when she gets home.
Okay.
I'm definitely in as well. Yeah.
All right, cool. So I'm going to be looking at what sort of token pairings we like the look of. Can each take a bit of responsibility for the research and see what looks good to us. Cool. So any other topics or questions you want to cover today? Hi, Benny. I can see you sneak in there. Luca reminded me that there are... Sorry, go
on. Does Cardano as a community itself do due diligence on people that obviously start up a pool, or is it just literally open to anyone that can just start up a pool and try and get obviously Cardano funds?
Yeah, that's the beauty of it, is that the way that the chain runs is all the securities tied up in the chain. If you're running Cardano infrastructure, it's very hard for you as an operator to manipulate it, exploit it, take advantage of it, and actually get more money out by doing those devious techniques than just by operating it. in a healthy way. So it's open to anybody in the world. If you've got technical skills, you can run a stake pool. If you've got marketing skills, you can gather people together to stake to your pool, and then you're going to be getting a rate of return of between sort of 4 and 5% now, APR on whatever you've got gathered into that pool. So, and you know, if you are trying to hack or attack the network, then there's very little chance of getting more money out of it than you would be getting from that 4 or 5%. And so that's the design thinking, the game theory behind the design of the Cardano staking system, is that you know, reward people for being good operators, and you're more likely to have you know, only good operators than bad operators. So it's not a massive rate of return, and it's, you know, some work is involved in doing it, but you can trust pretty much any pool operator out there, because you're not relying on them as good actors. You're relying on the Cardano thinking, and the code that's written to restrict behavior and exploits and all that sort of stuff. So it is really, really well architected. In fact, I was seeing on Twitter today, somebody, I mean, again, it's all about keep the press away from Cardano. Don't let anybody know about it, because Cardano's going to wipe us all out. So all the crypto press is very anti-Cardano's. I mean, it's not all of it now. They're starting to turn, but majority of it is, the crypto press seems to be backed by you know, people heavily invested in the other chains, or they're being leaned on by investors to be saying things only good about other chains and ignore Cardano, or at worst snipe on it still. But yeah, reality is that Cardano is still growing. It's still doing the best job out there, and will he continue to do so? So on Twitter today, I saw that someone had posted, particularly about liquid staking. It was a post about liquid staking, and they didn't even mention Cardano on it, which is the oldest liquid staking platform out there and best. And I just thought that was, you know, typical of it. And so Danny, who is the sort of IOG's community lead for Project Catalyst, or I think he's just leading Project Catalyst, to be honest, at the moment. He corrected the graphic to add Cardano in with its stats, and I just wanted to share those with you. So these first, the top, apart from this bottom entry, was created on the original post. So it mentioned Cosmos and Near and Polkadot and Avalanche and Polygon and Binance and Solana and Ethereum, and left Cardano off it, even though it's about liquid staking. And so the figures they were talking about is how much is actually staked: 2.3 billion on Cosmos, up to 20.4 billion staked on Ethereum, of which 7.3 is liquid, in that it can, it's not locked in. So which are really good figures, except for when you look at Cardano, it's got 25 billion compared to Ethereum's 20, and 10 billion of that is fully liquid. So approximately, because it's actually more than that in realist. So for a chart like that to be produced and to leave Cardano off, which is, you know, far and above the best operator in the space, is you know, what we're up against. So I'd take great confidence from that, in that we're definitely on the biggest threat to the whole ecosystem, and so we're in the right place. Sorry, there was a question coming in.
The only reason I made mention of it, Jonathan, is like Cardalonia. There still seems to be a lot of just money trying to be pulled in with the game, but not much development.
Right. Have they done any releases or anything at all? Are they talking about
they've got a staking pool. They've done a NFT sale, but again, it's just NFTs that, yes, you can buy land and other mountains and bits and pieces, but when you try and obviously look into who's actually building the project out, there doesn't seem to be anyone.
I've got some graphics. Yeah, I don't know any of these names.